Hey guys, what's going on? It's Rekt Capital and thank you so much for joining me in today's video. Welcome back to the Rekt Capital channel here on YouTube. Let's dive into today's video about a valuable metric that's telling us that the Bitcoin bull market isn't yet underway, that we don't have that confirmation that a new macro uptrend is in the works. Of course, we are seeing a uptrend right now, but is it a new macro uptrend? Is this a macro trend reversal into a new bull market? So subscribe to the channel for more videos like this in the future. We're going to be making more videos like this going forward. Let's dive into today's video. So we can see here that this is a green diagonal resistance, a multi-month diagonal resistance from around autumn to now midwinter, at least in the European zone. We're seeing this multi-month downtrend. It's a clear breakout, very strong breakout. Technically, this downtrend could be retested as a support, but given how strong this breakout has been, could we see a dip for that retest into 18,500? Certainly a technical possibility. That would be a textbook breakout, but we have seen a fantastic new trend emerge here. So this is going to be a multi-month trend, quite possibly, because whenever we see a multi-month downtrend get broken, a multi-month uptrend follows. And by the same token, if we see a year-long uptrend, or at least year-long downtrend get broken, then a year-long minimum uptrend would occur. And we're going to be talking about that macro year-long uptrend in a few minutes. Let's focus more on the short to midterm. So multi-month downtrend broken, multi-month uptrend may be developing here. A retest could be possible. And just to mention where we are macro-wise in the context of the orange 200-week moving average, we know that the 200-week moving average has historically been a moving average where we've seen bottoming, or at the very least some sort of downside wicking below this 200-week moving average before springing back up towards the upside. So essentially, this moving average has been a valuable bottoming out metric, but this time in this cycle, we're seeing this sort of downtrending channel form below the 200-week moving average. And I posited on my Twitter that we might be seeing a slightly a change in the characteristic, in the definition of what this 200-week moving average signifies for Bitcoin. Previously, in previous cycles, a bottoming out area. In this cycle, this could be a breakout point into a new macro uptrend. So that's one of the indicators that's worth bearing in mind, that breaking back above it and successfully turning into a support, because we saw here that a failed retest actually is negative and leads to more downside. Turning it into a support upon breakout would be fantastic for that trend continuation, but it still wouldn't be a metric that confirms a new macro uptrend, but more like a midterm rally. But nonetheless, worth watching out for that breakout point, because we might be seeing a shifting role for the 200-week moving average in this current cycle. So this level right over here, this being a monthly support, and you can see that monthly support here for many months before turning into a resistance, rejection, and now we've U-shaped reversaled right back above this previous resistance, which was a previous support. Could we be seeing this as a new support? Well, for that to occur, Bitcoin would need to once again retest this level as a support, and we're seeing some confluence here because we have a cluster of support right over here and over here as well, which actually figured as a resistance a few months ago. So cluster of support, and you can see that 19.5K is that blue level here. Generally, we're seeing from the technicals on the monthly time frame that a pullback, a retesting in price action would be healthy and even is pretty much warranted here on the monthly time frame, whereas the weekly time frame suggesting that we could go even a bit lower. But could we see such a deep retest? That would be healthy, but it isn't a given. More healthy and shallow of a retest could occur by retesting this red area, maybe even dipping into 19.5, because such a retest would be a good sign for continuation, with this area being flipped into a new support that could enable further upside towards the next monthly level, which is 23,330, so 23,000 approximately. This is going to be that next resistance, the black level, upon successful retest of essentially the bottom of this range. So this is currently the range that Bitcoin is trying to break out, or at least break back into, after a brief downside deviation. So we saw a breakdown, but no real confirmation of that breakdown from this range, and now we're slipping back into it. Turn it into support, this range low area, and the range high of 23k would be next. So very interesting to see what we're seeing here on the RSI, and feel free to check out my recent video about the RSI. I'm not going to go into the RSI in too much detail because I covered that in the previous video, so check out that video when you have a moment. But the long and short is here that this bear market bottom region, 2019 bear market bottom, 2015 bear market bottom for the RSI, that led to a rally going towards the very top of this red macro wedging structure. So by turning these historical bear market bottom regions into a new support, by the same token confirming a break back into this macro red range, that's going to be a very bullish shift for the monthly RSI, a new macro change shift. And you can see that the RSI is actually peaking back above this green area, only just slightly. So are we going to be in this phase where the RSI is going to perform a monthly candle close above this green area and then follow through with a retest heading into February? That would be a healthy pathway for the RSI, and it would be something that's very much setting up for that macro bullish trend for the RSI in particular. Because what's interesting about the RSI is this would be bullish to turn it into support and then rally towards the upside, but we can also see a uptrending RSI with downtrending price action for Bitcoin. So it's important to understand that divergences here between price action and the RSI can occur, and so it's important to not just use this in a vacuum, to compare it to price action. Are we seeing some divergences happen? But the macro is speaking for itself, that turning this back into support is a very bullish signal, and just comparing the RSI with price action and the trend on price action, that could be a fantastic confirmation signal. But generally, these are some of the confirmation signals that I mention in my new newsletter. And the monthly RSI, yes, is one of those signals, but I talk about 4 other signals that are really important. And we're going to talk about this, or at least one additional signal, so that's going to be 2 in this video, and you can check out the remaining 3 in my new newsletter. Check out the link in the description down below. The second signal that I'm going to be talking about, just to give you a bit more insight into what I cover in the newsletter and the level of depth that I go into, this is the 3 macro triangle theory here. Macro downtrend in the pre-2016 cycle, macro downtrend resisting price in the pre-2020 cycle, and macro downtrend in the pre-2024 cycle. And by cycle, I mean these blue vertical levels, these blue vertical lines here representing the halving event. And they are a valuable contextual point in time for Bitcoin. The halving is a fundamental catalyst which changes essentially the blockchain, the Bitcoin blockchain. And whenever we see this macro downtrend get breached is when we see a new macro uptrend begin, heading into the halving and enjoying exponential uptrending price action months after the halving. Breakout beyond the macro downtrend, rally into the halving, consolidation, retracement, and then movement, exponential movement after the halving. So this downtrend hasn't been broken. So that's one of my confirmation signals that I mentioned in the recent newsletter, that yes, we have broken beyond a weekly time frame trend line resistance, which a multi-month weekly time trend line resistance, apologies, will enable a multi-month uptrend. But in terms of a macro downtrend break, we haven't even revisited this region. And if we continue going up, then this resistance could be around 26k. If we see some consolidation, maybe pulling back and then rallying going into March, for instance, then 25k could be that macro trendline resistance. But I do feel, based on history, that upon reaching this macro downtrend, we're going to break it. Could we retest it? That's happened before, but it doesn't have to happen. As you can see, breakout and just new macro uptrend. Here in the pre-2016 halving, we got a retest before further upside, but banking on that retest, especially when we didn't get that in the previous cycle, is quite risky. So I want to be in a position before we touch this macro uptrend, essentially speaking. And I've been talking about this in the newsletter, that historically we tend to see, whenever we break down from this essentially descending triangle, right? We see descending triangles for Bitcoin across time. Whenever we see a descending triangle break, we then rally to new lows. We have that downtrending acceleration phase to new lows and to a bottom. And assuming that the bottom is in, let's assume for a moment that it is, although I'm just going to illustrate to you that we've just tapped that historical region, because breaking down from the descending triangle has led to a 50% retracement and a 65% retracement. And so if we plot these 50 and 65% retracement levels, we'll notice that we've only retraced 50% since breaking out from this descending triangle, which only means that we've just barely tapped this historical retracement depth level at 50% retracement. Now, is that enough for a bottom to be in? I'll let you be the judge of that. But of course, historically, and according to this theory, there is scope for further downside to find a bottom deeper in this region. But does that have to happen? That's the question. Does that have to happen? Do we have to see a deeper retrace? Because historically, we've tapped this range already. Minus 50%. We got a satisfaction of this requirement. So just because we barely grazed that region, maybe that's enough for that requirement to be satisfied, that technical requirement to be satisfied. And at the same time, time-wise, we might be also on the cusp of challenging that macro downtrend, because historically, 396 to 366 days before the halving is where we see a challenge of that macro downtrend. And of course, we are in January. The candle is dangerously close to this downtrend. So if we see Bitcoin challenge for the macro downtrend 397 days before the halving, much like in this case, then we'll see a March challenge here, or approximately March. And if it's 366 days before the halving, then approximately April is going to be the challenge of this macro downtrend. So technically, we have either a month and a half for Bitcoin to challenge this macro downtrend, so anything can happen during that time, or we have 2.5 months before we see a revisit of this macro downtrend and see a challenge of that breakout. So between a month and a half and 2.5 months, anything could technically happen. But until we break this region, we don't have confirmation of a new macro uptrend. Of course, you're going to try, the investors are going to try and pinpoint the absolute bottom. But the whole idea is to grab the meat of the move. If you capture this uptrend, then that's pretty good. You don't have to capture this little additional part, right? So if you capture this uptrend, for instance, you don't have to capture this little additional part. So if you're feeling FOMO, you haven't missed out on much. In fact, maybe if this is the bottom, then you've missed out on this little chunk, and maybe on this little chunk, and maybe on just this little chunk. So that's like a 30% move. Don't be disheartened by potentially missing the bottom, especially when we don't have confirmation of this bottom being in. We don't have confirmation of the bull market being underway. And once we get that confirmation, then we can be rest assured that we will get the majority of the move. So we might not get the 100% of the move, but you don't need to capture the entire move to make a decent profit from a new macro uptrend. So just bear in mind that even capturing 90% or 80% or 70% of the move is pretty good. Capturing 70% of the move and maybe missing out on 10% of the macro move, those are still pretty decent odds. In any case, that's what I talked about in the recent newsletter. This is one of the confirmation signals that I mentioned. I went into a bit of detail about the monthly RSI in a previous video, but there are 3 other signals that I'm watching for, and those are the signals that I've been using for many years now. I've been through these bear cycles already. There have been quite a few of them. I've been over 5 to 6 years in the space now, so I'm sharing my confirmation signals in the newsletter. Feel free to check out the link in the description down below. If you enjoyed this chart analysis, I'm sure you'll love that newsletter. But if you'd like to see more videos like this in the future, feel free to subscribe. Leave a like if you enjoyed this one, and I'll speak to you in the next one. Speak to you soon.